Nischal Maheshwari from Edelweiss Securities. Nischal, a word on Axis Bank first. Does it seem like the worst is behind us, and are we likely to see a up move and a relief rally in the stock now?
Possibly a relief rally. The numbers are as expected in the market basically, but I think what I'm a bit disappointed is the next year, and the next year they are still talking about a credit cost of anywhere between 175 to 225, so that's a long range actually. And the second thing is I'm disappointed on the growth, and the growth is now last year they done around 14%, and they are giving a guidance it's going to be somewhere more 4 or 5% more than the credit growth. So I think both the things basically is a bit of disappointing. So we have to be cautious on the stock.
And where does it stand within your pecking order for large cap private sector banks post earnings? Because aside of Kotak, we've seen a whole host of numbers.
So I think it should be around third or fourth in our pecking order actually. So we continue to be positive on IndusInd, Yes Bank. Both of them have shown once again very strong growth. HDFC Bank, and then ICICI and Axis.
We were talking about Maruti and the expectation there. Nischal, what do you do with the stock? This has been a dream run in the last 3 years. Expected to be an extremely robust quarter, but what from here for Maruti?
So I think we continue to remain a buyer, and I think there are 2 or 3 things which are factoring these positively for the stock. One is obviously the TINA factor, so you do not have any other play, especially in the four-wheelers, which continues to do pretty well as far as consumption in India is concerned. The second thing is they continue to hold on to the market share, rather they've been gaining the market share. So I think that's really positive. Capital allocation, I think all those situations are pretty positive. So I continue to believe that this is a good hold at these prices, and if there is a surprise, actually I think you should be positively surprised. Yes, I agree there is some concern on the front of currency. Let's see how rupee holds out there.
What about L&D, Nischal? That's been another proxy play to each of the segments within infrastructure that can see the light of day in this financial year itself.
So these are all calls basically which we have taken, and we continue to believe that there is a structural growth which is coming back into the world, and that structural growth should drive all ships up basically. So when the tide is up, all ships rise, and I don't believe that India is not going to be factoring in that. So we continue to believe that there is a cyclical recovery which is happening in the country, and we are buyers on Larsen & Toubro also.
Between Bajaj Auto and Hero MotoCorp, Nischal, very quickly, we're stepping into a pre-open session. What would be your call? Which one would you prefer?
I think Hero Honda, definitely. I think there is a recovery which is being very clearly seen as far as the domestic markets and the rural markets are concerned. And Hero Honda has an edge on that. And Bajaj Auto, I think 40% exports, you have a worry about basically that rupee is appreciating too fast. That should be a concern for Bajaj Auto. So I think it's a very clear preference out there.
Nischal, comment on that FMCG story, I mean, we can argue with valuations every single day, but if there is a story that is reflecting growth visibility at any given point in time, it's clearly FMCG.
So I think most of the stocks are reacting to the possible good monsoons again, and I think every day you hear. Yesterday there has been the Australian Met Department. They have come out and saying that the El Nino, which was expected to happen, that chances of that happening is basically going away, or receding actually. So you are expecting a more or less a normal rainfall. So that should be good for the FMCG companies, given that around 60% of their turnover comes from the rural side. So I think that's what the whole FMCG sector has been reacting, and they are also coming out of negative last quarter because of the demon situation. So things are coming back to normal, and yes, valuations are always there basically, but then you have to also see in conjecture with the kind of ROE and ROCs these guys make. So I think the world over that kind of valuations are there. So I don't see any reason that it should be any different in India.
Nischal, I understand that, temporary minute blips are par for the course when it comes to such a strong bull market that we are in. But are there any pockets where you would advise caution or profit taking right now?
So I think NBA housing finance is one space basically where I think stocks are running away much ahead of what we would have expected. Yes, there has been a strong growth out there. There's no doubt about it. But I think stocks more or less are all quoting 4 and 5 times price to book. And it's not that all these guys are some 30-40% kind of an ROE. They are around 18 to 20% ROE. So I think their market seems to be very, very frothy. So one should take away some money off the table there.
And where would you take a fresh buy call at 9,300? And Nischal, I'm only talking about the index, because for anybody watching us right now, they would be wondering, if I can enter the index at an index stock at these levels, which one would that be?
So we are very positive on IT actually, and I think that's an anti-consensus call because IT is also, according to us, a cyclical industry. And if you look at it, IT revenues closely tracks the US profitability, and US profitability is rising higher. And if what Mr. Trump has been talking about, if there are huge tax cuts in the US, you are going to see more profits for the US companies, and that would drive up the revenues for IT. So profitability of US companies, corporates generally leads the IT revenues by 6 months. So I think you are going to start seeing the fortunes. And if you look at it, each of the IT results, each of them have said that basically BFSI, which is a large space for everybody, is showing signs of recovery. Whether it was Wipro, Infosys, TCS, everybody has said the same thing. So I think stocks are at very good valuation, expectations are very low, and then the bottoms have been made because of the buybacks. So I think all seems to be stacking up well for IT.
So Nischal, you're saying that's the pecking order, Infi, TCS, Wipro, and you're bullish on all 3 names, or would you be rather specific and extremely selective when it comes to IT buying?
So I think more or less one can take that call, but our pecking order is Infi, HCL Tech and Tech Mahindra, and then TCS.
Maybe you could, given your time horizon, which is more near term, what would be your top investment call?
So I told you, I think IT is one of the sector basically we would be looking at. I think the other one which would give a surprise actually is the cement. I think these are the 2 sectors one should actually look at on a 3 to 6 month kind of a horizon.
Nischal, but you were earlier talking about your preference towards IT names, and you gave us your pecking order of the top 4 slots as well. Would that view hold true for pharmaceuticals as well? Because, again, pharmaceuticals is extremely news dominated, and the US FDA clampdown is not really helping most of the names. But do you sense that selectively one could even buy into pharmaceuticals, or not quite?
So pharmaceuticals, I think, is a totally different ball game altogether. So because pharma, what I see is basically the business seems to be up for the business model itself is now being questioned actually, because you have got a US FDA problem across all major companies, and if you speak to any one of them, basically nobody has any clue when it's going to get sorted out. Now, if you are giving these kind of valuations to companies, and none of these companies are cheap, by the way, at this moment also. So, if none of these companies are cheap, then why do we give them kind of valuation when everybody's 50 to 60% of the business is now under question? And you look at Sun, basically for 2 years they have been struggling. You look at Dr. Reddy, they have been struggling. You look at any company across the pharma space, basically. So I think we have to start looking at the models basically which are de-risked, and we personally prefer healthcare sector in the country. So hospitals and diagnostic chains is what our preference is in that.